Okay, last day of July here. We've got a Fed meeting. We've got a potential rate cut. That is probably going to happen. I would be shocked if they don't. We've got Noah, we've got Cody, we got the tackle trading team here to break everything down for you. And a lot going on out there in the markets, Noah. I know we were talking about some of our favorite candidates. There's a lot of stocks that have been trading, Apple earnings, but let's start with pleasantries. How you doing today, brother?
I'm fantastic as always. Thrilled to be here. I like it when people invite me to come to these kinds of things.
For sure. It's good to be liked and it's good to be invited, right? I'm that way as well. Cody, how are you doing, young man?
I'm doing fantastic. I got my TV on ready for old drone to start talking here in about an hour and a half or so. So,
J-Pal, German pal. What do you expect, Cody?
a lot of things that my hawkish self does not like. I'm gonna cry a little bit inside as I listen to him pander dovish tones. But I'm hoping Drone's inner hawk comes out and he says, like, okay, yeah, we cut rates, we needed to, but in the future, we're not going to need to cut as fast. And that's kind of what I'm hoping for, is that he's going to say, if necessary, way down the road, we might cut. But as of now, this should be plenty. That's what I'm thinking, because the economic data doesn't really facilitate a rate cut. The only thing that can, and Noah and I were talking about this in pre-production, the only thing that really pushes and favors a rate cut is currency wars right now. The actual economic data we've been having come out of the U.S. economy has not shown that a cut is warranted, which is also why when I think, okay, quarter point or half point, I'm a quarter point, because it's like, actually I'm 0 point, but quarter point is what they're going to end up doing. There's no reason to cut a half a point that fast. If they did something that radical, we would see a spike in volatility and it would just be too much.
Yeah. My fantasy football team name this year is going to be Bernanke's Boys, because I'm going all modern monetary theory. I'm going to be dovish, and I get it. I mean,
if that's the case, you got to play.
Boys, look, I'm going to have to go with the Powell's Pals or something.
And you need to play nothing but your rookies and stuff, and just overinflate your team.
Oh, natural inflation. It is what it is. We'll break it down. I get it, young man. You're a hawk. You're a fiscal hawk. You're raised in Texas. You don't want to see this kind of stuff because you know what it means for economics over the long haul. I understand it. We'll see what they end up doing. I think a quarter point is in play here today. Half point would be shocking. Really, it's all going to come down. And your TV in the background, Cody, is perfect because it will come down to his testimony. You know, what he says, I think when he goes live is much more important than what they do, because I think what they do is probably pretty much baked in right now. So we're going to be watching his tone. If you're doing day trading, if you're doing things like news-based trades in the Forex markets, wait for that second movement. Wait for the confirmation. Wait for the speech. Wait until you get clarity and trade what you see. Let's start with the S&P here, Noah. Not surprising, 0.12%, only up 3 points. Not much going on, but holding the moving averages. Give me a quick technical read, if you would.
I'll tell you what, this is what I like to call the wait and see pattern. This wait and see pattern is there's nobody's moving anywhere. Yeah, a little bit of selling yesterday, I think, ahead of the meeting. Held up that 20-period moving average, just inside consolidation. This is indecision at its finest. You got a nice little doji pattern on the chart today, just hovering above that 9-period moving average. And I think if they come out sounding dovish and he's got the right rhetoric, we'll see it break a new high. If not, I'm not sure what tone he's going to come out with that would make it sell off by any measure. But if it takes out that 20-period moving average, you might see some forced selling and big responses. It's always the knee-jerk reaction out of the Fed meeting I wonder about. And I think this one's priced in. I think this is priced in. It's going to come down to the tone.
Yeah, I do believe that as well. I mean, here's the thing. We were actually, you and me and Cody, we were all on the halftime point on the last Fed meeting that they had in June, and it was kind of baked in there as well. We haven't seen big moves out of the actual events. Now, I know this is the first rate cut in 12 years, right? Or 10 years. It could happen. We could see something, but I think there's really not a lot of risk in that price movement, in my personal opinion. We'll see. If it breaks below the 20, I think you're coming down to support. That would be an obvious test. I think the most likely scenario here, Noah, is probably chalk and not a lot of reaction. Then people are going to try to figure it out over time. But that's why the market's interesting. You do not know each and every time, which is what, kind of what happens with these events. Bring up Apple Computer if you will. I do not want to bury the lead here today. I know the Fed is going to be the biggest thing here in about an hour and a half, but Apple was the biggest thing last night. Apple gapped out 5% on strong sales numbers. In fact, the relationship of what they're selling from other products and their revenue against their iPhone is starting to get better. They're not so dependent on iPhone sales as they have been in the past. Still their number one product, but not as a big of a percentage. What was your reaction to Apple's earnings here, Noah?
Well, one, I'm a little bit excited about it. Two, I've been waiting for some of their new products. I've been waiting for their new Mac Pro desktop because it'd taken a long time to release that. I know a lot of Apple fans are waiting for some new stuff, and I think they've got it coming out. So they do have some, I think, potential new products coming out. I like the doji out here. That's right now a textbook gravestone doji.
I was going to say that gravestone or star
That
or
is,
whatever
that is
you want to call that.
gravestone at this point in time, as far as I know, and that's a really good example. And that just means it's got a chance, I think, fill the gap. It means it shot up, it ran up to a new high, and then you're seeing some selling, and it's so far holding the line of the gap. If you take that intraday, basically you just see where what went up off of the overnight movement was big, and then it kind of stabilized. A little bit of upward movement at the open, and then it sold off since then, but it's been holding that initial gap support zone. If it starts to break the gap, I think you got a good opportunity short term to fill the gap. That's a day trader's favorite type of thing is shooting the gap. Good trade could be a short term swing, but I think that's some good profit taking, because if you owned Apple and you woke up this morning and you had that much more money in your account, I think the knee jerk reaction is to sell. Like, woohoo, just made a bunch of money, sell.
Yeah. Obviously, the candlestick is going to be concerning. It just flashed red while we're talking. I know we're up 3.65%. I had the inverted fly on. I was talking to Cody about that. Quick hitter on that one. Just an earnings play, buy direction. I put this on the options report from over the weekend. For those of you who are pro members and review the kind of content, those reports, earnings plays, if you don't have them mastered yet, practice them. Apple was an easy one to practice on. It did catch a nice movement. Now we're up 3.5%. Noah, that old resistance point here, psychologically, do you think traders actually care about that right now?
Yeah. I mean, of course, it becomes that self-fulfilling prophecy. Everybody's referencing those price points. And so I think it does weigh in on the decision-making processes. It's always one of those things you have to wait and see. This is something I talk about often. Old support resistance levels are just that. They're historical, and they're a reference point for traders. Mm-hmm. It's a matter of whether or not they actually, take action on that. And you actually do see buying, or you do see selling. So, you got a big support resistance zone down there at 212. And you, of course, got those all-time highs out there at 230-ish, 233 at the high. And, nice, strong upward movement, good projection, good numbers as far as they beat their earnings. And again, leading the market there with a little bit of upward guidance. I like the pop. And I think if it does start to come down, 12 zone is going to be a support zone.
Mm-hmm. Yeah, for sure. Let's run through all the different indexes real quick here. Dow Jones, NASDAQ. We already looked at the S&P and then the Russell. And just give me a quick technical read on all of them, Noah. I'm seeing a lot of the same outside of the Russell, but give me a quick read on all of them.
Yep. Dow's playing wait and see, hanging around those moving averages, just loitering there. And again, it's kind of got a pennant type pattern to it. Still leaning towards the bullish side. We'll see what the rates do. And the NASDAQ, I think, very similar, coming off of the all-time high, not as big of a pullback as the Dow, but inside consolidation. And again, a little bit more selling pressure. If you look in, you can see a little bit more selling pressure heading into the meeting, but still above those moving averages at this point in time. So very, very similar chart read there. So that takes care of the Dow and the NASDAQ. Did we want to look at the RUT?
Yeah, let's do it.
The RUT's been on a move, and it's made me adjust some condors today. I've been rolling puts up on condors. A little bit of bullish, potential breaking the near-term resistance, but hasn't broken the old 1620 line there. So up above all the moving averages, showing a little bit of live, little uptick in volume yesterday. And I think that this is the one index I'm watching, Tim, for whether or not this market can still run on a rate cut, is if the small and mid caps are running, not just the big caps. Mm-hmm. I think that's going to be a real sign of strength for the market. Again, strength being technical move. But don't fight that Fed if they get what they want and the language is dovish enough. I think you'll see them running.
Yeah. I'm interested. In fact, Tales of a Technician blog here on Tackle Trading was talking about small caps and what's going on with those. I would definitely recommend you go and read that, especially since Coach Tyler does a lot of that rut cash flow condor system. The small caps are very, very important. Stocks are stuck until the Fed here. Obviously, the rut is kind of outperforming in the morning. Let's go through the dollar and the commodities. Go back to $DXY. And Cody, I want to get your take on this one. Obviously, currency relationships, the different currency pairs, they're different than the index. We're approaching a resistance point here, Noah, and I think it's of note and very important to kind of think through this. On a monthly candlestick, weekly candlestick, long-term candlestick, we've got potential upside if it breaks and runs. Now, where I can't have a lot of logic here, I'm having a hard time wrapping my head around it, is why would the dollar run in the face of lowering interest rates, right? Walk us through what you're seeing on the dollar with that inverted head and shoulders on the daily, the resistance on the weekly. Let's do a full breakdown on this one.
Yeah, you bet. This is interesting. This is a really interesting topic, in my opinion, because can the dollar run in the face of a rate cut? And I think it can. Here you've got that inverted head and shoulders pattern you were talking about with the breakout, and it's coming up against that all-time high. How does lowering interest rates increase demand for the dollar? Well, it doesn't. But I think the whole point of the rate cut is not the economic numbers like Cody and I were talking about prior, in our prep. We were talking about it being more about weak dollar policy. I think the weak dollar is more about trade and increasing the ability for the U.S. to export, since we've been, again, like net producers of oil, et cetera, et cetera. Softer dollar, I think, helps us in trade. And I think that the dollar runs not because of the interest rate, but because of just general GDP. It also still has the best interest rate out of all of the currencies out there. And I think it's probably a foregone conclusion that the Eurozone is going to go negative at some point. And the dollar still, I think, the prettiest girl at the ball, if you will, for a pretty uncouth term there. But,
and to hit on that Euro thing more is that as they are pushing and showing weakness, and they just showed, their second quarter was extremely terrible, that Euro being the second largest after the dollar, is that, if they keep getting bad, then that does add strength to the dollar. And like Noah said with the GDP, if we're going to lower our interest rates and increase the ability for countries to trade, and our GDP is doing well, then that could be a reason that it could rise into these lowering interest rate environments, because this might actually be a little bit of trade strength or fundamental strength versus rate cut. What's the word I'm looking for? Inflationary strength.
Mm-hmm. I'm thinking through the whole thing right now with the dollar running, the dollar at resistance. It's hard to buy anything in front of this, but staying bullish dollar, like you guys are talking about, does not. It doesn't inspire me, but it's what it is on the chart right now. If you break, I think you have to consider that. And there are some other currency relationships that are still weak. Bring up the euro dollar cross pair. I read some data out of Europe today that out of the Eurozone, they actually had decreasing, GDP numbers. They came in, I think, at 0.2% instead of 0.4%. And here we are down at the low point, another red candle, just breaking down technically. Pound dollar cross pair. The pound with all the Brexit problems and Boris and all those kind of things happening, it's been weak, green candle today. But overall, if there was one currency you'd want to buy outside of the dollar, Noah, what is it? If there is one.
Gold.
Yeah.
Does that count?
It does, yeah.
So I think outside of the US dollar, probably the Japanese yen.
Mm-hmm. Yeah, the yen is one I've been keeping my eye on.
Doesn't make any sense whatsoever.
It doesn't because their debt to GDP ratio is 240% right now, whereas ours is just made it above 100%. I think we're at 104 or so right now. Don't quote me on that. But when you really think about that, they have 1.5 times or 2.5 times what we have debt to GDP ratio, and yet we see that still as a reserve currency, a currency that has negative interest rates, an economy that's just operating in this huge debt environment, and it is the next reserve currency after the dollar. It does not make sense, but it's where people run when they run out of the dollar. They run into the Japanese yen.
Yeah, it is true. And those safe haven currencies, maybe the Swiss franc as well, you could make that case for it there. They've been they've seen some interest, some attraction. So if we do hit resistance and fade back down, that dollar yen cross pair could move. Dollar Swissy here, just a complex pattern. No, I mean, that's an inside triangle kind of wedge. It needs a break and a run.
Yeah.
We'll get more clarity today, for the Forex markets. There's no doubt about it. Give me metals, crude oil.
We could get less clarity, actually. We could get, yeah, we expect more clarity. We could get less clarity.
Yeah, it is possible. I hope not. Hero has a great question here. What percent do you increase gold in your portfolio because of all of the things that we're talking about here, Noah?
100%.
All in on gold. All in on the shiny stuff.
Go full Ron Swanson on it.
Full Ron Swanson. Yes. No, that's a great question. I'm always kind of around 10% and I don't really vary much from that regardless of conditions. Just because it's, durable. And I think of gold as more of a value store than really growth potential, but you do get the occasional run. So gold's showing strength. I think it will also run up. I think the dollar ends up running up, and I think gold ends up running up as well.
So on that, one of my favorite Ron Swanson quotes is, I don't know how many dollars in wealth I have. I know how many pounds. I was like, that's actually pretty awesome.
Yeah. How many ounces, how many pounds? No doubt about it. Gold obviously red candle today with the dollar up, but I'm still bullish. One of the things that's been very, very impressive, I saw you answer this in the clubhouse as well, is how the trends have decoupled a little bit. The dollar's had a good month, and gold has actually held up near the high point. Generally, in the history of the gold-dollar relationship, Noah, they've had an inverse relationship since about 1972 when we came off the gold standard, right? When that flipped. But here we are, and they are decoupling in the short term. What do you account for that? Just kind of randomness or just demand for both?
I think it's international concern. Plus, I also think that there's bonds, concern and bond strength. I kind of look as bonds as the traditional flight to quality that you can't trust right now, just because of, I think, global sovereign debt pictures. So I think it's part of that. And then, it's shiny and it's pretty and there's not a lot of it. So the paper's running, and I think you're seeing some demand from, like governments buying gold, buying gold stores, increasing their holding of gold. So I think the demand's strong. Buy the dips, buy the breakouts. It'll top out eventually, and it'll eventually recouple. It doesn't stay. The negative correlation between the dollar and gold does not stay apart for long, but it does occasionally run the same direction. I think right now it's, dollar's the strongest of the fiat currencies, and gold's gold, and then silver's been impressive tear.
Yeah,
so quite a run.
So really quickly, and I can't remember where I got this from. I know it was someone that y'all had interviewed on y'all's podcast years and years ago. They explained the ratios of anything you compare, whether it be gold dollar, gold silver, gold platinum, crude dollar. He explained it. They're like a rubber band attached between them. You don't know which one's going to pull which, but it's the further they stretch apart, eventually one's going to snap back in one way or the other.
Mm-hmm.
And that ratio, ever since I heard that, I watched these ratios, and you notice they always snap back, whether it's the stronger one ripping the weaker one up or vice versa, the weaker one ripping the first one down. But as things decouple, the tendency for them to revert back to each other is increasing.
One of my favorite pairs trades is when you see them at extremes, when you see like overbought conditions and oversold conditions, and that rubber band's got a high probability of pulling things back in, revision to the mean. And I learned about a trade strategy where, like, for example, if you believe that silver was going to revert back down to the mean, you thought it was going to pull down, they'd throw on like a bear call spread on something like silver. And then if you believe the dollar was going to rise, you'd put a bull put spread on the dollar, and you'd wind up with it's kind of a synthetic condor, if you will, based off of the probabilities of revision to the mean. And it's kind of an interesting concept where I think you're right about the ratios. Like when they do get too far apart, it will eventually revert back to the mean because there's economic laws and principles at work there, and general supply and demand principles.
It's a rubber band. The further you stretch it, the more tension it's pulling back to the mean.
Until it snaps and you lose an eye. That's never good.
Well, that's what's going to happen if Powell keeps going crazy with his dovishness. There's my little jab at him for the day.
Well, you'll keep jabbing at him. He doesn't care. He can take those jabs 15 rounds, kid. I can promise you that. They are done.
Well, yeah, if he's getting jabs from Trump, he can take jabs from Cody Mackey.
For sure, for sure. He will not capitulate. Gold, silver, both bullish in general. Red candle today, a little bit of hesitation up here near the high. Make note of it. Crude oil, actually nice little candle today in my estimation. You're back above some MAs. You've got neutrality in the short term. 58 was kind of a short-term intraday level, Noah, that I thought could have, sparked a little bit of an upward movement of 2, 3, 4 points. We've got another resistance up there, that 61, 62 pivot. I'm still neutral. I was leaning on the bearish side of the fence by just 5 yards last week, but I think I'd actually be on the bullish side of that fence right now, maybe the positive 45. What's your read on crude oil?
Seasonally, I always expect oil to do poorly in the fall. Just traditionally, when I've looked back at the data, it just doesn't do a lot of bullish activity in the fall. So I've been leaning more bearish, but with the price closing back up above the moving averages, that's kind of forces you back into neutrality. So I'd say you're literally like smack dab between the last defined support resistance zones. So that leads me to be pretty neutral. My seasonal bias is bearish, but I'm not going to pull the trigger on that until I see it breaking down below that support zone.
Yeah, definitely. It would have to break out one way or the other. I know there was a very, very tight range on the intraday there that you do have a little bit of a breakout now, but we've got a doji candle only up 0.67% heading into a Fed meeting. Everything will be risk on here this afternoon until we get clarity from that. And Bitcoin, quick look at that cryptocurrency hanging around this 10K mark. It's really fascinating to me. Dollar up, Bitcoin holding. People don't think of it like this, but Bitcoin has an inverse relationship with the dollar in some ways as well, because it's priced in Bitcoin. So here we are holding 10K. If you were just looking at the technicals,
Bitcoin's priced in dollars.
That's what I meant.
Yeah, the dollar's not priced in Bitcoin.
That's what I meant. Maybe someday, maybe with modern monetary theory, as we keep going, maybe it'll flip that around. But if you're just reading the chart, Noah,
double bottom off of a rising 50-period moving average and a general 10,000 support zone, I think it leads me to want to be bullish.
Yeah. I'm with you as well. I kind of see that it's got to break the pivot, got to get back above the moving averages for it to have clear sailing. And then even with this type of product, there's never really clarity. There's always the unknown and very, very volatile as we move. 4% here today is a light range candle when it has an ATR of 876, Noah. It tells you a lot. It's moving 8-9% per day right now on that chart, which is pretty amazing to me. Some stocks I want to run through before we get into rapid fire here in just a few minutes. Take a look at AMD. Had earnings last night.
I was trying to predict which stock you were going to go with, and that is exactly the symbol I went with in my head. He's going to ask for AMD.
M pattern breakdown into the moving average.
Into the moving average. I know that they've got some chip production coming down the pipeline, and I think that this is an opportunity for the necessarily the buyers, but I think I like it because it's on sale. It puts a stock that I'm highly interested in back down in a buy zone. Their earnings numbers, if you look at it again here, they came in just shy of their estimate. And I think their forward-looking production is going to be the thing that saves them. I'll wait for a confirmation signal on that, but I know a lot of traders who would look at that candle and think to themselves, that's a good make and put opportunity. So,
yeah.
Yep.
Well, I'm one of them. One of them.
Yeah, no doubt. That's the first thing I think of when I see a good stock I like gap down.
If you see a stock that you're willing to own anyway, that you've wanted to accumulate, but you were just waiting for clarity from the earnings. Now, the day of a big red candle, you better truly be ready to boomerang this thing. But you can go down to like the 25 strike, get the 200 period moving average, do a naked put, you sell a put option, you have the obligation to buy 100 shares. That's where put options give you this tactic and the choice to be able to enter into different companies like this. Now that 30-day AMD,
I don't know about 30 days. I just started looking, like you just mentioned it. I'm like, I wonder what my strike prices are giving me.
Yeah. There's some money down there, like the 26, 27, and I might even go all the way out to like September, 45 or 50 days, somewhere in there. Sell some volatility as well. Definitely on my my go-to list. I love that company. It's been a tradable company. It's always on the top leaders. Take a look at GE, which everybody knows my opinion of General Electric. I might have to be more open-minded about my opinion of General Electric. I actually like their earnings report. They came out and they did make some improvements on their bottom line. They've been moving in the right direction this year. They're trying to get the business back on track, and here we are post-earnings, holding a nice candle, a little breakout there. I think there is a short-term trading opportunity, and this is a dividend-paying company.
They changed their CEO, what, 2 times in the past 3 years?
Mm-hmm.
And the more recent one, he's actually, doing good things where he's like, all right, this is crap, that's crap. When they sold a couple of their assets, they're making money. We, kind of jabbed at him for it. But I think he realized that he had to, liquidate some things to help clean up some of the crap that GE has. And I think it's working. I think he's doing a good job.
Yeah, I think they are moving in a better direction. I still have real problems with the fundamentals, and I do.
Oh, it's gonna take years for them to actually come out of the hole. But he's the first one who said, "Hey guys, let's stop digging downward," and he's actually, building a plan to figure a way out of the hole. So I think he's doing a good job.
You have about 8 months of price action where it's holding 10, $11 and paying a dividend, Noah. That's a neutral cash flow candidate.
Yeah,
it is. You got to leave your opinion at the door.
Like much of a dividend, but it's a dividend nonetheless. So
Yep. C'est la vie. That sometimes you got to admit when it's time to throw it in and say, hey, maybe I shouldn't just be permanently bearish on a company. And I don't know if I'm there yet, but I was impressed with the report today. I will give that full disclosure. Spotify, I want to look at some of my favorite companies here that did have earnings.
The audience to make sure they're sitting down before you said that, because that was what did Tim just say? He liked these earnings.
I have to be open-minded, Cody. I'm a trader. You can't get stuck on opinions, right? Same thing with any of this stuff. At some point, if the information and the data is evident, then you got to do something about it. Spotify.
So what I hear you saying, Tim, is if you could be right or you could make money.
Yep. Do you want to be right? Do you want to be rich?
All right.
Do you want to be right or do you want to be rich? In fact, somebody typed that in the chat for me. Do you want to be right or do you want to be rich?
That's one of my favorite trading quotes.
Yep. Spotify earnings here, Noah. I'm long-term bullish on the company. I like the product. I like the service. I like what they're doing. I like the way that they're packaging it with other content. What's your read here on Spotify?
Well, again, another negative earnings report, but that doesn't seem to be affecting it. It's still staying in a nice upward pattern.
Mm-hmm.
So
yeah, I agree.
I like it above 156 as a breakout. Probably a little close to resistance for me to buy on the dip here, but I like it on a breakout.
I don't think it's an entry point today, but I do like the breakout potential up here at the high, especially post earnings. One of the most important reasons why I look through earnings regularly is to understand economics and what's happening at the raw level, the bottom up level in the market. But outside of that, it's to build watch list over time, because now Spotify can be on a bullish watch list. And at any point over the next month or two, if it breaks out, I think you've got to play there. Step system rules apply. CME Group. I've been bullish on the exchanges for a bit. A lot of these types of companies have been strong, not as strong earnings though. And now the pattern and the chart is ugly. You've got a big range between the 50 and the 200 period moving average. Read that chart for me.
Well, I like that little doji out there floating in space. This has got the potential to become an abandoned baby if you see a gap back up. A little bit of weakness off that, nice support zone, but like you say, there's a lot of room between there and the 200 period moving average. So unless I see some upward movement in price on that, I'm not going to touch it.
Mm-hmm.
It seems like it'll, if it breaks that support zone, I think it's got a long ways to drop until it hits that next support level with the 200 down there. And I didn't draw that line very straight, but ballpark, big support zone. I think at this point in time, though, if this support zone holds and you start to see it heading back up, there's some potential there.
Yeah, I agree with that. And then 2 more companies, then we're going to get into some rapid fire, have some fun. I want to take a look at Domino's Pizza, which was our stock of the week on our Instagram channel, not Papa John's, but DPZ actually.
DPZ, yeah.
Yeah.
I don't like either of them, but
First thing, I got a question for everybody out there, because Matt's on a plane going to New York City. He's going to be in the greatest city on the planet for pizza. I love Chicago. I'll be there in a couple of weeks, but that's a casserole. That's not pizza. My friends in Chicago. I don't want to get into it too much, but that is my opinion. Okay. What's your go-to slice? You walk into a New York pizza shop, a New York deli. They've got the pizza laid out. What do you go for?
Pepperoni. It's pizza, New York style, with the grease on it and a pile of napkins to get the grease off the
Fold?
top.
Meat lovers.
Mm.
Meat lovers kill that thing.
Yeah. What about out there? What's your go-to slice of pizza? New York style pizza. When you walk into a pizza shop, you get one slice. You're walking around the city. You're going to eat it as you go. To me, I think it's a pepperoni slice. I think, Noah, you're right 100%. But a margarita slice in New York City is one of the greatest things. The basil, it's just amazing. Simple pizzas, right? Johnny, that's right. It is. Pepperoni is a go-to. There's no doubt about it. Domino's Pizza was our stock of the week because I chose it. And we had this on the options report this week. By the way, if you've watched the options report, just type in the chat options report, okay? And make sure you put that in the chat. If you've not seen it, I'm trying to break a record here, people. We keep track of how many views we get on all of our content, and currently, I am not the record holder for our reports. So somebody go click on that options report again at some point. And DPZ, I love that backfill, Noah. It's already triggered. It's not a new trigger here today. We actually hit our first target. We're on our way to our second target. Give me a read on that chart because it was a quick hit or swing trade for me.
Quick hit swing trade, and there's profit taken there with that hammer candle. So you got, the initial bearish retracement setup, really good energy on the downside, and it's coming into the known support zone. And you got a hammer candle. This is where I think you should be scaling out, taking some profits because it's got a good chance of forming a double bottom and just coming back up into that mess. If it, scaling out would be wise because then if you get the breakdown, you can still extend your gains, but lock in the profits at that support zone.
So first target was 245, Cody. Yeah.
Before we move off of this, fun fact I heard the other day and I looked it up and it's absolutely true. If you would have bought this stock, Domino's Pizza, at the bottom of the market in 2008, it was the most grossing recovered stock because its low was $2.61.
And
it's now a $260 company, $240.
That's pretty incredible if you think about it. That means if you
never know which company is going to really have the highest growth, but you don't just buy something because you're like, oh, it's going to do it. You play the chart, you play the pattern, because who would have thought Domino's Pizza would be percentage-wise the most grossing company after 2008?
I was a pizza delivery boy. I would have thought it. Yeah. All right. In 2003, I had a 3-month job delivering pizzas for Domino's Pizzas. So there. All right. I absolutely would have thought it. They're a great company. They make a good slice. That Pizza Hut garbage, no good. Obviously, I'm joking a little bit about the Domino's Pizza. Not exactly the biggest quality in the world, but I did like this setup and I like that pivot and that transition. And I think whenever you hit a short-term target in a pattern like this, because Noah, this was really about the earnings gap, right? Yeah. You had the red candle down, the backfill into the moving averages, the pivots on Monday. Monday was your confirmation day. And then entry, you're probably only in this trade 3 or 4 days now, right?
Oh, yeah.
Scale out would be appropriate. You have to be efficient when you are trading. There's no doubt about it. Okay.
Interesting chart.
I agree. And then the other one I want to look at is the one that you're going to be doing a video because we had a vote on it, and that's FedEx. And you'll be doing something that today, I think, and putting this on our Instagram account. The people have voted out of the companies we put up there for the poll. This was the one that they were most interested in getting a deeper analysis on, Noah. So give us a preview of that.
Well, I'll tell you what I like. I like a breakout retracement pattern. It's among my favorite things. You get a breakout with a retracement, a little retest. It's got some room to run to the 200 period moving average. Coming off of bottom. Now, this is also a stock I look to every fall. We're a little early. I don't normally expect it to start moving in August, but I do expect it to start moving September, October. And I like the higher lows. I like you got some big volume kind of building off of that. And this little setup right here, very clean entry candle. You can catch it still, room to that 200 period moving average. But I like to build into a position trade for this for the fourth quarter. Because again, demand for shipping goes up, and it's been a go-to play of mine between FedEx and UPS. In the fall, just remember that FedEx in the fall, it's one you can look at every year, and it's got a pretty solid track record over the last 20 years.
Reversal characteristics. And one of the things I liked about this company quite a bit was the UPS earnings, actually. And when you know your competitors, because a rising tide lifts all boats. I mean, in the market, it's not like if UPS does well, FedEx does poorly. Investors don't think like that. If UPS does well, FedEx is most likely going to do well. And so here, UPS had a takeoff quarter. They broke out their run. And this one's also a bullish candidate. There's no doubt about it. But that got us interested in FedEx because of the relationship between the two. And Amazon.
That just made me go to Amazon, because if you're buying stuff on Amazon, it's going through FedEx or UPS, right? So
Sure.
So yep.
All right. Welcome out to our halftime report here, guys. If you're watching our channel right now and you're not subscribed yet, give us a subscribe, click the bell. We're here every day. We're having fun. We're looking at the markets. We're breaking things down. We're engaging with you guys and talking about what's going on out there. And if you're watching our show right now, we got about 70 people here live. Give me a thumbs up, make that a habit. When you come in, pop that thumb up. It always gets the word out there. I mean, it's a shameless self-promotion. There's no doubt about it. But we're doing this to grow the tackle trading community. And if you're a pro member of our community, just type in pro membership, because those of you who are taking advantage of the content and the resources that we put out there, I'm very, very proud of it, Noah. We put out a lot of great stuff. There's no doubt about it. $97 a month for everything we do. If you think about it, it's pretty amazing. All right, rapid fire time, guys. If you got a stock you want to look at, we got about 8 minutes, probably a rapid fire. Pop your symbol in there. We're going to go oldest to youngest, and that means you first, Noah. And let's see, who's going to be.
Am I not? How about that?
Not by much, a little bit, but it is true. I will point it out. I turned 40 this year. I got to remind myself I'm still younger than somebody. Overstock.com, OSTK, first one coming in here, and you're up, Noah.
All right, OSTK. Short term, a little overextended, I think, heading into earnings. So, I mean, it had a nice reversal characteristic, getting back up above those moving averages, nice breakout above the old highs. Slowing down ahead of the Fed, which makes sense. But again, earnings is close, so watch out for that earnings.
Micron. By the way, this CEO of Overstock is quite eccentric. I'll just say it like that. Micron, nice Polish pullback. AMD coming down, going to bring some of the chip makers down. Semis are hesitating in front of the Fed. I love the company. I love the semiconductor space just for trading in general. That's bullish. That's bearish. That's volatility. These companies can fly. Micron, a little pullback here. I do not mind that one at all. Match.com, MTCH from Scott here, Cody.
I love it when our students can give me some great picks, but I hate it when earnings ruins the opportunity. So this is a good, flag or retracement starting to set up, but earnings being right in the way of it, I got to wait till after earnings. I can't touch it.
Step system rules.
You got a week. Oh, wait, you're going to push the rule.
I think we got to be rule-based here.
2 weeks.
2 weeks. 2 weeks. Do not, what is it? Swipe right, swipe left. There's a joke here. It will be a bad joke. I'm passing. Swipe up. I don't know what it is. All right. SMH. Actually, go to IWM. Chris Couch. Always good to see your name. Great to have you in here. Is it breaking out? Yes, it's breaking out, but it's also running into a new resistance. Small caps going to be interesting. They've been neutral all year long. If they can break and pop, there's some upside there. They have some room to play some catch up. Be careful, though. There's still a pivot back there from April that I think is significant. And by the way, on IWM, the RUT or the RTY is the more important psychological measure, and 1600, anything below 1600 on the RUT is not a breakout yet, Chris, in my opinion. And let's do SMH here. Cody, you're up.
Oh, I didn't even pull up my screen. SMH, that looks pretty good too. I want a doji on that before a doji and then a confirmation of the upside. I'll take it all day.
No, remember when we started trading?
Right back down to previous resistance too.
And the holders were the biggest thing on the planet.
Oh yeah.
Yeah.
Semiconductor holders. I mean, it's still, you got to like the chip makers. Tech's strong. I think if you get, the Fed meeting, you'll get some bullishness out of this market. These are pretty pullbacks across the board. So, I always, now when I look at those things like the holders, I look at them as a gauge. You can buy them, but I personally go in and pick the stocks that have the best personalities.
BBY, best buy. And Yeah, I like it. Still bullish. I mean, a breakout up there at the high, you actually have new entries. We had this one on as the stock of the week last week when it broke out and started to run. Nice move, riding the lightning there. The 9 EMA, you can see how that's just holding that very, very aggressively. Good looking company right there.
Yeah.
KSU.
Ride the Lightning was a great Metallica album.
I agree with that. Yeah, for sure. KSU, Kansas City Southern, railroads here. Noah, you take it.
Railroads on a breakout. What's not to like? Just it's a little messy on the entry, but if you wait for it to take out that high, that'd be good confirmation.
Did you see the video I put on my personal Facebook, Noah, about the kid playing Monopoly and just crying? His mom's he's like 7. It's all over social media.
That is hilarious.
It is the funniest thing.
It's so true though.
But was it Monopoly though? Oh, I guess he landed on the taxes space, and that's what it was.
Yeah.
Taxes. I know exactly how that boy feels.
Oh my God! It was
seasonal affective disorder, something like that.
I think somebody put it on Twitter as well, so you can go check our Twitter feeds. I'm sure it's on there somewhere. KSU, I like the railroads in general over the long haul, though. Transportation and shipping.
So, am I wondering, did you get to Monopoly and taxes from the railroads? You always buy the railroads of Monopoly.
That's right.
Okay, I was just trying to follow that train of thought.
Yeah. Dude, I always buy the railroads. First of all, you buy everything in Monopoly, don't you? You land on it, you buy it. No hesitation at all.
Yeah, there's no downside. There's no debt. You just buy it.
Yeah, just buy everything. Monopoly, modern monetary theory right there.
Modern monetary theory is built right into Monopoly's rule book. If the bank runs out of the money, you just make more.
Wasn't there something like the original Monopoly game was actually created by a communist, I think. I have to look this up now before I start quoting stuff that I'm not sure of, but I'll look it up. Cody, find that for me.
I can look it up. I do know it was during the Great Depression, though.
They were talking about socialism, I think, as a way. I think what they were doing, if I remember it, they were showing how greed is bad, that everybody who always wants stuff ends up making a bad, choices and all. I don't know.
Instead, they showed how capitalism was awesome. Good job.
Well, they made a bunch of money selling the game, so that turned them into capitalists, right?
Yeah. We've got about 4 more here, and then we're going to roll Stone, STNE. I'll take this one. I still like the company. It's on a fundamentally strong watch list. Small cap company out of Brazil. It's been a volatile one this year, but I like the developing trend. I like the developing action. Earnings up here in about 3 weeks as well. Intel, real quick, Noah, I'm going to give that to you. We're just bouncing around wherever.
This will be like the 4th semiconductor we've looked at. They all have the same pullback pattern. I like the setup. Just needs confirmation.
Yep. Cisco from Neil. Cody, you're going to get Cisco here.
I'm looking at Monopoly right now. You take Cisco.
I'll take it. More neutral. You've got pivot relationships slowing down into momentum, heading into earnings. Probably a Vega candidate there in my estimation. Hershey, HSY. Noah, you take this one.
Feels a little over top heavy at the moment. Anytime you see a long distance between the stock price and the moving averages, particularly that 20-period moving average, the expectation is revision to the mean, but it's got a lot of strength. Coming off of good energy, I think you buy a dip.
Yeah, and Justin, that SMH was a semiconductor ETF, the one that we looked at earlier. So absolutely it is. And I think
you were somewhat correct. It was made by a game inventor, but it says her ideas behind the game were influenced by Henry George, and who was a socialist, or he believed workers should own all the means of production. And
it was like a Marxist thing. I can't remember, but then Monopoly took off, and now it's one of the most popular.
He's not actually a socialist, but as I'm reading through his economic theory, it's close.
I bought a copy of Monopoly Cheaters Edition for my kids for Christmas, and the entire.
Isn't that just in the rule book?
I think it's just Monopoly.
Wait, is that crony capitalism?
Yeah, it's the crony capitalist edition. Yeah.
I always got real skeptical when my brother wanted to be the banker. I'll tell you that. Like, thou want this.
The only way to win, isn't it? Be the banker.
I see. Mark, you're here. Tell us what we got going on Tackle Trading here. We're at the end of the show. Make sure that we get our proper promotion out there.
All right. Well, we have bear market survival guide this evening, 8:30 Eastern. Now, markets all-time highs, many stocks at all-time highs. Volatility very low. This is oftentimes, how many times have traders said, I wish I would have bought protection or done something with my portfolio when volatility was really, really low. It seems they only want to buy protection when volatility spikes, and those put options are a lot more expensive. So bear market survival guide, Tyler goes over fantastic defensive positions and things you can do to protect your portfolio. That's tonight at 8:30 Eastern.
The thing about it is it's a really good call, and we don't look at the VIX every day, but it's not a bad day to look at the volatility index, Noah. When the VIX is low, options are cheaper, they're less expensive. It's a good time if you ever are going to get portfolio protection and a hedge. Do it when the insurance market's cheap. I don't know if you necessarily are going to need a full hedge on this market until you see some weakness, but hey, some conservative investors, Mark, they're going to approach it that way.
I'm part of that conservative market, and I actually always have a standing buy for a few shares at 12. And every time the VIX hits it, I'll just get a notification, which it hit it last week. It's like, hey, you picked up some VIX. I'm like, perfect. I love it. Yeah. I'll pick up VIX at 12.
Well, and even put options on the S&P itself, SPY puts right now, we're at low volatility. They're going to be relatively cheaper right now, Noah. So hedges with the leap options, things like that can come into play. BMSG system, Mark, I think that's going to be 8:30, I believe you said, right?
8:30, yes. And I have a couple other things. I have a couple openings, and we've been advertising this on the Trading Podcast. But if you can beat Matt, Tim, and I in fantasy football this year, we have a special Trading Justice Podcast League. And if you can be the winner of that league and beat the three Justice brothers, then you get a free annual membership.
So gotta win the fantasy football league, huh? I like it.
You gotta beat us. We're doing a little league. So if you are interested, as football season is approaching us, email me at team@tackletrading, and I'll get you more information.
Very, very good. All right, guys, great job. If you're out there, you're watching, join us, tackletrading.com. Go sign up for the newsletter, The Tackle Today. We put out a real cool one each and every day. Become a pro member. There's always a 15-day trial in the comments, in the chat. And if you ever need anything, email Mark, email myself, email anybody, and join us over there in our community. We're out.